Hey, Steve Saretsky here. As always, this is the Friday update video. If you enjoy these videos, if you get any value out of them, hit subscribe. I appreciate your support. Comment below as well. I really want to engage with you, answer any questions that you might have. Basically, I just want to talk quickly. I'm not going to, try to ramble on too much, but the Bank of Canada came out with their semi-annual financial review. This is for economic geeks, this is something that a lot of us were looking forward to. I went through the whole 40-50 page report. Boring stuff for the most part, but I'm going to try to keep it very simplistic and highlight the key points that I really want to get home and I think that are important to you. The Bank of Canada highlights 3 systemic risks to the banking sector. These are obviously ones that I've talked about extensively. Number 1 was household debt. Number 2 was high house prices, and number 3 was like a cyber attack. Obviously, household debt, Canada being one of the most indebted household sectors of all the advanced economies in the world. Yeah, I mean, obviously I'm not going to talk about that because I've done extensive talking about that. High house prices. And then I really just want to tie it back into the stress test in January and what that means for the market. I think the impacts and really understanding what it really means. Like I've heard so much information out there. One thing I like to do is, I'm obviously always studying markets, reading financial history, understanding booms and busts, and it's given me a very good sense to what to look for and how to gauge the temperature of the market. Really just going out and asking people, how do they perceive the market? What do you think the stress test is going to do? And whether that's asking realtors, mortgage brokers, people that are buying and selling, I think a lot of people don't understand what the stress test means and what it can do. Even just having a discussion with realtors, they say, oh no, it's not going to have any impact. And I think it's very, very important. At least I'm going to provide you sort of my opinion, and I don't think by any means it's the gospel. I think it's potentially worth noting. And I would, again, open to your thoughts below. But basically, real estate is probably the most, it's the asset class that requires the most, it goes in flux the most with the credit market. If money is flowing, real estate is very liquid, you have a lot of transactions, you have a lot of turnover, and you have generally higher prices. And so obviously what we've seen was these central banks have embarked on I think it's a $9 or $10 trillion asset purchase program, which is basically what they do is they buy up these bonds and they suppress the yields on them. Which allows them to keep interest rates very, very low because you're suppressing the yield on these bonds. And again, this is a very simplistic term, or very simplistic explanation. And so what they've basically done is they've bought all these up. They've provided these low interest rates and liquidity in the market, encouraged banks to lend, encouraged people to borrow because the money is so cheap to do so. And of course, you've had real estate prices reach stratospheric heights. And so what happens is, when that credit, the taps, when they turn that on, money's flowing, prices are going up. When they start to turn that tap the other way, it all has a reversal effect. They're basically trying to cool the markets down. They're trying to pull back lending is essentially what they're trying to do. You've seen that with the Federal Reserve in the States, that they're now trying to basically taper their balance sheet, pull back on buying these, buying these assets, buying these bonds. And it's the same thing in Canada. Right now they've done 2 interest rate hikes. OSFI's brought in not 1 but now 2 stress tests. And important to understand, right, when they say, oh, it's not going to have any impact, it's all basically correlated. Lending is basically correlated on how are the banks' confidence. Banks will lend freely when they're confident in the market. And mortgage rates are tied to the bond market. And so you can't really look at it in a micro view. You almost have to look at it in a macro view and tie everything together if you want to understand what's going to actually move the markets. And so the stress test, they say, oh, this is not going to do anything. Look at the first one, it didn't do anything. So in Vancouver, 90% of mortgages are low ratio, meaning people are putting down 20% down payment or more. 90% of borrowers are doing that. And so the first stress tested only targeted the 10% high ratio borrowers, people that needed mortgage insurance. Now, they'll say, okay, well, if people are putting 20% down or more, that means, oh, there's a lot of like equity in that market, which is true. But a lot of the reason for that is because CMHC will not insure mortgages above $1 million. So basically, if you're buying a property for $1 million, it has to have 20% down or more. And so that's partly why 90% of the mortgages in Vancouver are low ratio, meaning these mortgages are now going to be targeted by the new stress test. So we had 90% before, which were never stress tested in Vancouver. So of course, we didn't really see much of an impact. So I think that, I look at the detached market right now, which is relatively, I would say it's quite soft. And I'm sure a lot of realtors will definitely agree with that. Well, now you're throwing a mortgage stress test on top of that, which reduces someone's borrowing power by 20%. I do think that's going to potentially have a noticeable impact, and the Bank of Canada believes it's going to take about 6 months to start to begin to work its way through the system. So I think what a really telling sign will be is like, okay, how does March and April really start to shape up? Again, the detached market it's quite soft right now, but we are in the winter. Is it going to have its usual spring pickup, or is the stress test really just going to hammer it into the ground? I think that will be a very telling sign. But that's really the big thing. And so the Bank of Canada estimates, and again, this is all in their financial review, you can go look at it. They believe this will basically eliminate 12% of borrowers. 12% that originally would have qualified, say, for a low ratio mortgage. It's now going to basically eliminate them from the market. So you're cutting potential buyers by 12%, and then the ones that can buy, you're reducing their mortgage by 20%. Now again, maybe the Bank of Canada's statistics aren't perfect. Maybe people somehow get away with this. Maybe some of them go to the credit unions, private lenders, etc. But I think at the end of the day, when you add it up, you can basically look at it and say, okay, credit has been very free-flowing since the financial crisis. These central banks have pumped in trillions and trillions of dollars of liquidity. Now there are slowly here starting to turn the dial and turn the taps off. Basically, this whole stress test, the Bank of Canada essentially wants the risk off the big banks' balance sheets. It's balance sheet clearance time for these big banks. They want the originations to come from whether it's private lenders or alternative lenders or credit unions. They want them to start originating the loans. And this, that's basically the plan, right? Is they want to protect the financial system. They feel that obviously the banks have a lot of these mortgages on their balance sheet. There's been a lot of lending, very high house prices, and it's time for them to basically take some of that risk off the table and pass it on down the line, discourage people from borrowing as much money, etc. So that's basically what the stress test is going to do. As I said, whether you're in Vancouver, 90% of people now, you're going to eliminate 12%. Toronto is very, very similar. And, that's basically where we're at. So just to quickly summarize, so yeah, if you have any questions on that, put it in the comments below. I'm going to do in the next couple days, I'm going to do a video on the November numbers for Vancouver, basically highlighting trends, prices, etc. In these markets. Again, as I said, the detached market to me appears very soft. I think the condo market is still moving, still a lot of multiple offers, but most of that price movement is in the one-bedroom segment. Maybe it's partly winter time, maybe it's a bigger slowdown trend, I don't know, but 2 bedrooms, 3 bedrooms, condos appear to be really sort of basically plateauing, where this price movements aren't really going up much at all. And so, yeah, I think that's, again, sort of a very interesting thought process of the detached slowly coming down. We have 1 bedrooms that are still going up, but everything else seems to be pretty much flatlining now. But again, we'll see how that plays out, right? We usually have that spring pickup, so that should be a very good indicator. But I will be curious to see how that stress test plays out, because I think a lot of people don't understand that. Again, it was a 90% low ratio of borrows in Vancouver, so it's a substantial amount of equity. You know, obviously, how much of that equity is equity, or how much of it's borrowed in the form of second mortgages. In Vancouver, this is the quick one, just to quickly finish it off. In Vancouver, there was a 25% increase in people taking on second mortgages from the year before. So homeowners that tacked on a second mortgage on their property increased by 25% last year from the year before. So yeah, you can see that people are either running into cash flow problems, or they're taking on a second mortgage to basically buy investment properties and riding the hot hand. So it's an interesting statistic that, again, all ties in, correlated, and this is what the stress test is designed to basically do, is to begin curbing lending and begin cooling the market. Whether they're successful or not remains to be seen, but those are my thoughts this week. And yeah, Bank of Canada's financial review, I wrote a quick blog post on that. You can check that out. I'll put that in the description below. All right, I'll see you in a couple days for the Vancouver market update video.